We are covering these 6 top stocks with big percentage gains today. While watching bullish price actions, let us inform you. Our review on VVPR, VivoPower International PLC, a company known for its focus on sustainable energy solutions like electric vehicles, solar energy, and critical power services, is currently making waves in the market. If you've been following their progress, you'll know they've been all about pushing forward with electric solutions, whether that's through their electric vehicles for mining and industrial use, their work in solar energy, or their broader sustainable energy initiatives. But now, there's something new on the horizon that's really getting investors buzzing. The big news is that VivoPower just announced it's received a $120 million all-cash takeover proposal from Energy Holdings, an Abu Dhabi-based energy solutions company. If you're wondering about energy, they're not exactly a small player either. This company rakes in about $1 billion in revenue and operates in regions like the Middle East, Africa, South Asia, Europe, and Southeast Asia. So, this could be a big deal for VivoPower if it goes through. Right now, the proposal is still in the early stages. It's non-binding and subject to due diligence, meaning both parties have to hash out the finer details before anything's finalized. However, the market seems to be pretty optimistic about the potential. Shares of VivoPower shot up a massive 135% when the news broke, and even after some trading settled, they finished the day up around 84%. That's a pretty wild surge in just one day, and it shows how much investors are taking this offer seriously. But here's where it gets even more interesting. VivoPower isn't just sitting back waiting for this takeover deal to happen. Last week, the company revealed that it's also working on spinning off its subsidiary, Carat LLC, into a separate entity that would list directly on NASDAQ. The plan is to distribute 5 shares of the new Carat Digital for every share of VivoPower that shareholders hold as of a future record date. This could be a huge move, potentially giving VivoPower investors even more value. Carat Digital is looking to raise about $10 million from strategic investors to fuel its growth, so that could add some serious momentum to the overall business. It's a lot of action happening in a short period, and the stock market is clearly reacting to these developments with a lot of excitement. With the energy takeover still in play and the Carat spinoff coming into focus, VivoPower stock could continue to be a hot topic in the coming weeks. And of course, the board and Energy are set to finalize their talks by April 2nd, so we might get more concrete details soon. For now, it's definitely a company to keep on your radar if you're looking at the sustainable energy space. It feels like things are really starting to heat up for VivoPower, and there could be more to come. Our review on LXEH, Lixiang Education Holding Company, Ltd., a company that focuses on private primary and secondary education services in China, has been making some waves lately with its stock price jumping a massive 75%. What's interesting, though, is that there doesn't seem to be any specific news or announcements to explain the surge. For a little context, Lixiang offers a combination of the standard PRC curriculum and some pretty unique programs like arts, sports, and foreign language education. They also run a high school division through partnerships, so they're covering a pretty broad range of education services. This sudden spike in stock price is definitely catching people's attention. In a market like this, a big jump like that usually means something's up, whether it's a new deal, a partnership, or some exciting news about future growth. But in this case, we're left without any clear explanation, which makes things a little murky. It's possible that investors are seeing something that's not immediately obvious, like a shift in the Chinese education sector or growing demand for Lixiang's unique educational offerings. Still, the lack of news means it's hard to know for sure what's driving this rally. It could be just a speculative move by investors, or maybe it's a sign of more positive things to come. For anyone thinking about jumping in on Lixiang, it's definitely worth keeping an eye out for any future updates. These kinds of sudden price movements can be unpredictable, so it's good to stay cautious and see if there's anything concrete behind the hype. Our review on SURG. SurgePays Incorporated, a tech and telecom company catering to underbanked and underserved communities, has been grabbing attention in the market with a huge surge in its stock price, up 70% today. If you're not familiar, SurgePays is all about providing mobile broadband and financial services to low-income consumers across the U.S., with a focus on affordable mobile services, financial tech, and even helping small businesses through its point-of-sale systems. While the company had a rough year financially in 2024, there are some major moves that investors are clearly excited about. During their recent earnings call, CEO Brian Cox made it clear that SurgePays is about to enter its most aggressive revenue growth phase ever. The company's nationwide launch of Linko Mobile, its prepaid mobile brand, is one of those key strategies to capture a bigger slice of the mobile sector. On top of that, SurgePays has become a mobile virtual network enabler, MVNE, which means it can provide wireless infrastructure to other companies, opening up a whole new revenue stream. There's also the fact that SurgePays successfully integrated with AT&T, giving its customers access to nationwide 4G LTE and 5G coverage. That's a big deal for a company of its size. Plus, the company reported over 300% revenue growth in its point-of-sale platform from Q1 to Q4, a strong indicator that their retail operations are really taking off. All these strategic wins are setting the stage for a big 2025. However, it's not all sunshine and rainbows. SurgePays did face a rough patch last year, with a 56% revenue drop, mainly due to the shutdown of the ACP program, which had been a major revenue driver. This led to a significant net loss, and expenses were up due to stock compensation and contractor fees. But despite these financial challenges, SurgePays is projecting over $200 million in revenue for the upcoming year and plans to ship between 250,000 to 300,000 SIM cards a month. They're confident they'll hit positive cash flow by the end of 2025, and with nearly 9,000 stores in their retail network, the potential is definitely there. So, why the big jump in the stock today? It's all about the future. Investors are clearly excited about SurgePays' ability to turn things around with these new initiatives, especially as they diversify their revenue streams and scale their operations. The company might have had a tough year, but the moves they're making to expand and grow are giving investors a lot of reasons to believe in a strong comeback. With the guidance they've provided and the strategic moves in place, it looks like SurgePays is setting itself up for a promising 2025, and the stock surge reflects that optimism. Our review on AQB, AquaBounty Technologies Incorporated, a company that's reshaping land-based fish farming with its advanced aquaculture technology, has seen its stock jump by 50% recently. For those not familiar, AquaBounty is all about sustainable fish farming using cutting-edge technology to improve fish breeding, genetics, and overall health. Their land-based farms are designed to be disease-resistant and to protect wild fish populations, using systems that treat water with ozone, salt, and UV radiation to prevent harmful pathogens from entering the system. Now, what's driving this sudden 50% spike in stock price? The thing is, there's no clear news or announcement explaining the jump. That can be a bit of a mystery for investors. Usually, stock moves like this are tied to new contracts, positive earnings reports, or big industry news. But in this case, we're left guessing. AquaBounty's technology and focus on sustainable aquaculture could be resonating more with investors right now, especially given the increasing interest in sustainable food production. The company has a lot of growth potential, and the fact that it's positioned to serve key consumption markets with a more eco-friendly approach to farming might be driving some of this investor enthusiasm. It's also possible that this could be driven by broader trends in the food and sustainability sectors, with investors looking ahead to the future of aquaculture and betting on companies like AquaBounty that are leading the charge in land-based, disease-free fish farming. While we don't have specific news to explain the jump, it's clear that AquaBounty has a solid foundation for growth, and the market may just be starting to take notice of that. For anyone watching AquaBounty, it's a good time to keep an eye on what happens next. These sudden stock movements can sometimes be the start of something bigger or just a momentary spike based on market sentiment. Either way, it's an exciting time to be watching this company, especially with its innovative approach to sustainable aquaculture. Our review on OCEA, Ocean Biomedical Incorporated, a biopharmaceutical company that's tackling some of the most pressing health challenges out there, has seen its stock soar by 50% today. Ocean Biomedical is all about pushing the envelope in oncology, fibrosis, infectious diseases, and inflammation. The company's got a solid pipeline, working on groundbreaking therapies like monoclonal antibodies for cancers such as non-small cell lung cancer and glioblastoma. They're also in the game with innovative malaria treatments, including a malaria vaccine and a couple of new therapeutic candidates targeting the disease. They really stand out by accelerating the development of assets sourced from top research, universities, and medical centers. Now, here's the twist. There's no big news driving this surge. No groundbreaking partnership announcements, no clinical trial updates, just a sudden 50% jump in their stock. It's one of those situations where investors are left to wonder what's behind it. Perhaps there's some behind-the-scenes momentum, or maybe it's a market reaction to the long-term potential of their research. After all, oncology and malaria are two huge areas in global health. And if Ocean Biomedical's treatments really pan out, the upside could be massive. Given their pipeline, especially in areas like cancer and malaria, investors might be getting excited about the future. Malaria is still one of the world's most widespread diseases, and any new treatment could be a game changer. Likewise, their work in oncology, specifically with those novel monoclonal antibodies, could be paving the way for new therapies in a space that's always in need of innovation. Investors might also be betting on the company's ability to keep developing these assets, particularly since they're pulling from the rich well of research at top medical centers. So, while today's stock move might seem a bit mysterious without any clear news, it's certainly worth paying attention to. Ocean Biomedical has a pretty interesting mix of products in development that could have massive impact, and this stock jump could be a sign that the market is starting to take notice. If something big happens on the horizon, whether it's a clinical trial result, a new partnership, or a regulatory update, this 50% surge might just be the beginning of something bigger. It's a company to keep on your radar, especially if you're interested in the future of biopharma. Our review on EDBL, Edible Garden AG Incorporated, a company focused on sustainable, controlled environment agriculture, has seen its stock jump by 32% today, with no clear news to explain the move. The company uses hydroponic and vertical farming systems to grow organic herbs, lettuces, and flowers, all while recycling water efficiently in its closed-loop system. They also have proprietary software called Green Thumb to track plants through the supply chain, offering everything from fresh herbs to vitamin and protein powders. So why the sudden surge? While there's no big announcement, the spike could be driven by growing interest in sustainable agriculture. With more people leaning towards organic and locally grown products, Edible Garden is positioned well in a rapidly expanding market. Investors might also be excited about the tech side, with their Green Thumb software improving efficiency in a competitive space. This move might just signal that investors are starting to take notice of the company's potential. If any big news drops, like a new product or partnership, this stock could keep climbing. It's definitely one to keep an eye on. Please subscribe, give the video a like, and watch more from our playlist. Thanks.